The excitement. I remember the days of jumping in with both feet before having a clue about what could happen. When I was about 6, I was on the dock at my uncle's cottage. It stretched out quite far into the lake, which was needed for the boat launch. The day was sunny, it was early in the morning, and that usually means the water's pretty calm. Without any sediment floating in the water, you could see the bottom of the lake at the end of the dock, and it looked pretty shallow, like I could just touch the bottom quite easily. So with a laugh, I just jumped in the water. Well, the bottom was further than I thought. So I started treading really fast and yelling for help, but I kept splashing water into my mouth, which muffled the cry for help. So I heard my uncle yell from the cottage door as my little arms were getting pretty tired. I was about to go under when I saw one of the ropes used to secure the boat dangling in the water. Reaching out for it, I managed to pull myself closer to the dock and keep my head out of the water. Seconds later, I was safe. So many dive into trading, thinking that if others are doing it, they should be able to do it because it looks easy. Really, you enter a trade and you get out with a profit or a loss, right? It seems simple enough. There are so many things that make up a consistently profitable trader that it could take literally hours to go through them all. But there's something that you can do to see if this illusion of easy is something that you can handle. When you trade a mechanical trading system like the ones from NetPicks, everything is pretty much spelled out for you. If you can follow rules and gain a knowledge of the art of trading, you should do pretty well. With these types of systems, you don't need the same type of knowledge as someone who trades something like order flow or gap fills. They are great for new and experienced traders who take the time to back test and forward test and really own the system. The problem is that they make it look easy. And for the most part, it is. It's not sticking to the rules that puts most traders into the ditch. Many will see a few days of winners and the next day start trading real money. They have yet to have the rules ingrained, so following them is a habit. For example, a trade sets up right at a resistance level. You put your entry X price points above it. You decrease risk, adjust your stop as soon as it's required. You know the trade plan like you do your own birthday. Well, human nature, however, it hates to miss opportunity. You've seen the early success and you tell yourself, hey, you know what? Hey, I could have made $1,000 this week with a real account. And it's easy to get that account set up, sit at your trade desk the next day and just start trading. Well, don't. Make a commitment to yourself that you'll trade an entire month on a demo account or extremely small position sizing. After the month is over, if you're not net positive after commissions, rollover, or spread costs, you'll do another month. You have to follow the trading rules exactly as laid out. One miscue, you start over. Over time, executing according to the rules will become a reflex. So do you have what it takes to do that? Do you have what it takes to stick to one simple rule, such as 1 month, perfect execution, and net positive? If you can't, and the emotions are driving you to trade live and large before that, they'll also drive you into failure. Think of it as a test to see if you have some of what the successful traders have. Really take this seriously. You would not just shred money, so why risk it before you've proven to yourself that you can succeed? How many people will actually do this? I guess a very small percentage. Those that do, and I speak from experience with myself and others, you find trading to be much more simple, not really easy, and profitable. And those that don't, well, I hope you have success with the next shiny object.